Good morning, YouTubers. T-Square with T-Square Talks. Hope everybody's having a great day. Got a awesome video planned out for you guys today. A few different things that I want to talk about. One, if you're a member, please make sure you keep an eye out. I am going to be putting up an important announcement for members, and then members will have a very short time to pick their numbers. So I want to give everybody the opportunity that is a member to put their numbers in. So keep an eye out for that if you're a channel member. If you're not a channel member and you'd like to become one, it's only $1.99. But with that being said, even if you just hit that thumbs up, that subscribe button, it really helps me out because I got a great video for you guys today. Today, I want to be talking about the banks. And a lot of people have heard this time and time again. Not so much from me, but I have heard a lot of channels talk about it. But you know how you hear stuff on a channel and sometimes these channels just over glamorize the end of the world and the end of the banking system and the end of capitalism as we know it. I try not to go too much into, I guess you can say, fear tactics. However, I am kind of wondering what is going to happen really soon. I'm going to lay out some stuff for you guys, and I think it's going to be super interesting, and I think it could have a big reflection on the price of gold and silver. Now, I'm going to show you it through articles, through numbers, and let you make your own decision on how serious this could be. Because it was only recently that I have been doing, I did a couple videos on the fires in California. And at first, I announced, it's going to cost a lot to fix it. How's it going to affect things? And then I got thinking today, what kind of effect, what happens if you essentially owe on your house and you don't have insurance on it? And that's not normally allowed. If you owe the bank money, you have to have insurance. It's paid for you. However, in some cases, if someone instantly drops you and you don't have new insurance, well, I mean, banks charge you a little fee and, nothing major happens. I mean, I've had it happen to me before where I had like 3 days without coverage and it wasn't the end of the world. However, what would happen if something happened at that point in time? How would it affect, one, your payments? You'd still owe technically. And what are you going to do? I mean, we're not talking, a $100,000 home. We're talking expensive homes in California. And how is it going to affect the banks if they have to eat those? Because let's be honest, if your house were to burn down, most people will walk away. We've seen it in 2008. I hate to say that. If they walk away from their home loan, how much money will the banks have to eat? And I think it's going to be an interesting video because it's a lot to think about, but I pulled up some great numbers for you to look at and make your own decision. So with that being said, let's take a quick look at some stuff. I hope you guys enjoy the video. If you do, hit that thumbs up button and let's get started so it doesn't drag too long. Okay, right off the bat, I pulled up the price of silver. Even though it's the weekend, it's not moving. It's still something I've started saying if I'm doing a video. $30.31. A lot of people saying, hey, what's going on? Silver ain't really doing nothing. And, I'll be honest. Right now, it's not really doing a whole lot. It's kind of going sideways. However, it is starting to work its way back up if you look at the last month. Now, gold, in my opinion, looking pretty good at 27.02. Again, it looks like it's moving sideways a little bit, but we are seeing it, gradually go up. The last 30 days, look, you can see that it's slowly moving up again. But who's buying it right now? I think a lot of the people buying it are the people that are preparing one, and the elites, the rich people, the countries, people that know what's about ready to happen. There's even rumors in Washington they're having an emergency meeting today. On Saturday. I'm sorry, I shouldn't say today. On Saturday. So I'm curious. I haven't been able to find anything in the news about that to verify that yet. We may hear something come Monday. It's definitely going to be interesting because we have the inauguration coming, and who knows if it's about that, what's going on. They moved the inauguration inside. It's going to be interesting how things play out. But jumping in, taking a look, the first thing I want to look at is the actual prime interest rate. So this is the history of the prime interest rate. If you've ever wondered, hey, are prime interest rates high right now? Are they low right now? What are they? So right now, I would say, looking at 8.5%, that's not incredibly high in my personal opinion. We're actually a little bit lower. We did get up to 8.5, but I'm going to show you something else on this chart. We're actually at 7.5 right now. It's not super high when you draw a line, 7.5%. I wouldn't say it's crazy. There's been a lot higher. But one thing I want to point out, look every time you see these gray shadows. Some of y'all might already know what these are. These are recessions that we've had in the past. And what they do is that whenever a recession comes, they tend to drop interest rates. Sometimes just a little, like here, just a little. Sometimes a little bit more. Sometimes a lot. And sometimes a really lot and really fast. And as you can see here, and as times get good, the interest rates start climbing up again, like you can see here. Last time, we got up to 8.25%. The last time we had it. Here, we got up to 8.5%. And look, they had to plunge it back down. So I'm kind of wondering if there's something around that number that's starting to hurt banks. And I believe it could be, like I've said in other videos, low interest rates for so long make it to where essentially, the banks lose money when the interest rates go up, because a lot of people have loans at a lower percentage. Now, what do? I mean, they've got to basically eat that, and then they're stuck paying. Let's be honest, they don't pay that much on savings accounts, but they have to start paying out on savings accounts. Moving on, I wanted to know what the computer would say. I mean, I know the banks are in trouble, but I wanted to know what they would say. Are banks in trouble? And the answer that I got kind of surprised me, because the way this stuff is censored, I guess you can say, they hide a lot of this stuff. But yes, some banks in the United States are at risk of failure. Factors contribute to unrealized losses. So that's basically someone's house. Maybe it went down in value. That would be a good example of an unrealized loss. Maybe they bought bonds that aren't really of value anymore, but they didn't, know what to do. They didn't want to sell them, because once you sell them, then you take the loss. It's no longer unrealized loss. Uninsured depositors, deposits that exceed the Fdic insurance limits. Now, that's anything over $250,000. I'm going to target in on showing you some stuff about Fdic today. Interest rates can make it harder for banks to stay solvent. Because they've got to pay. If interest rates go up, they've got to pay a little bit more money to the depositors to keep them happy, keep their money in the bank from investing it in other stuff. And essentially, a lot of their money is tied up in stocks, different investments, and even treasury bonds on a lower interest rate that they have to hold them for so long. Inflation, it says, can contribute to bank failures too. Well, clearly we've been seeing inflation, so that's no joke. Examples of banks that have failed, obviously y'all remember Silicon Valley Bank, First Republic Bank, Signature Bank, and Republic First Bank. Those all collapsed in 23 and 24. So here's the thing, though, that I want you to take from this. So right off the bat, everybody is in the understanding that banks are in trouble. There's no disputing that. However, there's going to always be commenters that say it's not a big deal or this and that. But let's move on and look at some other numbers. So right now, the value of assets increased significantly from 2002 to 2023. Deposits slightly dropped in 2022. The assets U.S. banks accumulated is approximately $31 trillion. Now, so here's what I want you to understand. $31 trillion is how much they basically assess that they have. So, and that's a really big number. If you were to take everybody's money out of the bank, it's 31 trillion. That's basically what they're saying. We're going to go on. Don't forget that number. FDIC insurance. Now, keep in mind, this is about a 6 months gap. And if you take into account, because I wasn't able to find exact up-to-date numbers. So when I searched around looking for different stuff, these are the numbers that I got, even though this is 6 months, but 6 months is not going to make a huge impact because we're going to actually pad it quite a bit. Currently, FDIC insurance has $121.8 billion. That's a big difference. That's how much money they have. That's a big difference from 31 trillion. Huge difference. In fact, here's the thing. It came out with less than 0.5%. Now, I got to be honest with you. Like I said, we're going to pad it because some people from banks said, no, there's like 2%. As long as we don't lose 2%. But that's them saying that. So obviously they're going to increase the numbers a little bit. Where do you draw the line? I've even heard people online say 1.5% on that too. So, I mean, it's something to think about. Now, I wanted to further look and see what are the top banks in California. Now, here's the thing. I chose California for property lending. And these are the banks that I had gotten. Obviously, Wells Fargo, everybody's heard of that. First Republic, Chase, Bank of America, Citi. Some of these banks are all over the country. However, what I want you to look at specifically is their loan values. Now, this was in 2022. So it's safe to assume that these loan values, it's actually probably bigger now. But like I said, that's 2022. They didn't go down, chances are, because nothing really has came down unless you are following the price of silver, and they like to manipulate that down. But we won't get into that for this video. But when you look at these numbers, okay, you got 34 billion, 30 billion, 27 billion. But then you come back here and you look at how much FDIC has. 121. Now, keep in mind, these time frames are relatively similar. They're just not all 100% up to date. But 121 billion. 121 billion. If too many of these banks up here fail, and these are based, a lot of these are out of California. So California, they're big loan banks, top 10 lenders in California overall. So these are the companies that probably hold the liens on most of the property in California. That is what I would make that assumption. As you move on, let's see here. The California wildfires. I wanted to know roughly what they're estimating the value of what has been burned. How much money has essentially been burned in value? And it blew my mind when they said $250 billion. I'm even choosing the lower of the two, but $250 billion. Now, we don't know exactly how much of that property was uninsured, how much of that property the banks will have to eat. But let's just say for a minute, at $250 billion, I personally am not convinced that FDIC is going to be able to, once they go under FDIC, it's like an insurance company running out of money. If they have to default, who's going to pick up that slack? Now, a lot of people will say, too big to fail. They did it before during the housing crisis. The government picked it up. But what a lot of people aren't keeping into account is now the Dodd-Frank Act. And that has a big factor because government ain't bailing them out again. And when that happens, that's when stuff's going to get ugly. Because the people that hold money in their bank, will they be able to take that out? Some people think, oh, it's no big deal. They'd be able to get it out. You know, they'll figure something out. And most of the time, something does get figured out. However, you have to remember what happened in Cyprus. Those people couldn't get their money for 12 days, 13 days. A lot of them losing money, huge amounts of money. And so once you understand that stuff, you really start to understand the big picture. If banks go under in the United States, if they were to fail, would it have what would happen? Would it be the end of the world? It would have a negative effect on the economy, on employment, on lending, and it would. And it would have a big effect on people's money. What are you going to do? I mean, if you got payments. So I was sitting there thinking when I was going through all this, I was like, what would happen if my bank went under and I couldn't access my money? And I was like, at first I was like, okay, I can't take my money out. I'll just do a YPay or whatever they call them, where they zap the money from your bank to the credit card. That will all cease. I will not be able to do that. No money will leave the bank when a bank collapses. And I was like, oh boy. And then I was like, well, how would someone pay him? You can't even send a check because the check went clear because no money can leave the bank. And so when you start realizing that, that would have a drastic effect. Now, I'm not going to say it's 100% what's going to happen because there's no way to tell. However, I wanted to follow it up with, and I already know the answers to these questions, but I want you guys to be able to see it, what's going on here. You know, a lot of you may remember what happened to the price of gold and silver when we had the banking crisis before. The price surged. In fact, think about it. It was the 2008 housing crisis. That was the time that banks were really in trouble. And look what happened to gold and silver. Silver shot as high as, what, $50, a little over 50. Gold shot all the way up to 2,000. And of course, it did come back down. And in some cases, like gold, it's already climbed back up. Where is it going to go when the next crisis happens? And that's why I really like gold and silver. I think it's important that people understand that banks and United States individuals' confidence in the banking system is really what the big factor is. Now, I really wish I knew if they had some kind of an emergency meeting today. I haven't been able to find anything out. I know there was talk about shutdowns and this and that and already running out of money and the debt ceiling. But I actually had seen an article where they said that it has been pushed back like 6 months. And I find it interesting. Everything just gets kicked down the road, kick the can down the road. Eventually, they're going to get to a position where they're not going to be able to kick the can down the road, or something bad is going to happen really fast, and there's not going to be a lot of time. And that's kind of what happened during the 2008 housing crisis when this happened. Now, I don't know how bad these forest fires are. I mean, I seen the news, I read the articles, but I was not physically there, obviously. It's up to you, though, to make these decisions on how bad it's going to be. Personally, I think it's going to be bad. I think it's going to be bad, and I think it's not going to collapse the banks necessarily, although I've got to say it's possible. Anything's possible. But on top of that, it's definitely going to put some panic, and it could take down a couple banks. Don't think that a couple banks won't go under and have to ask FDIC for help. Now, another thing to factor even in the FDIC for help, even when one bank goes under, that causes fear in the markets. It causes fear in gold. People run to gold. People run to silver. And it's definitely something that people need to consider. So, like I said, that's why I'm stacking. I'm stacking that. That's one more reason that just adds to all the many reasons that I've said on here on why I stack. I mean, there's a lot of different reasons. Obviously, I do still watch my premiums. I know some people, they're like, I don't really care about the premiums. I actually had seen somebody selling some junk silver. And I was like, you need to be watchful on how much over you pay for any silver. What might seem like a low amount, if it's also fractional silver, you can really get caught up in not really fully realizing how much you're paying. When you get into grams of gold, when you get into specifically grams of silver. I even seen someone selling grains of silver. I actually contacted them. I wanted to see if I could get some silver grain bars and basically in capsules attached to a card and kind of do something for all the members. I don't know if that's going to pan out the way I want, but it's not a lot of silver. It's just something cool to see. You know what I mean? But when you're talking a grain of silver, I mean, I doubt that even makes a difference to people. But it is just a cool little feature. Obviously, that's not something I would do for a giveaway. The giveaway will always be minimum of 1 ounce of silver for, I call it a giveaway, but technically the event. Just a fun event for members that we do every month. So with that being said, I'm going to wrap the video up here. I want people to realize we definitely got some stuff coming. Because the fires aren't totally out, this is ongoing. We won't know what's going to happen right off. I do expect some strange stuff to happen. There's a lot of people trying to predict stuff, but I definitely would be on guard. Keep your silver, keep your gold. I wouldn't be quick to sell. That's That's just my personal opinion. And with that being said, I'm going to wrap the video up here. I hope you all enjoyed the video. And like I said, hit that thumbs up button, hit that subscribe button. Consider becoming a member for only $1.99. If you are a member, keep your eyes out for the important announcement that will be coming out. You will only have probably a short limited time to put in your number, that if you have a preference of like what number you want. And I'll explain that more in a future video. So thank you all for watching, and hope you enjoyed the video, and I will see you guys again on T-Square Talk. Take care, everybody. Have a great day. Bye-bye.